Hi everybody, this is AJ Singh, CPA from GNS. I'm putting this podcast quickly together because there's a lot of questions that have been asked lately on the Employee Retention Tax Credit, on the application process, and there may be many clients or potential clients that are coming to me wanting to apply, but they're not very sure what the qualifications are to get this credit. So I want to make it very clear that the IRS is really scrutinizing these applications. They're investigating about 11,000 suspicious claims right now. And, the rules are very clear on how to apply for this credit. Even the AICPA, which is the American Institute for Certified Public Accountants, they raised the issue about firms that are soliciting this credit and not applying for the application is not being done correctly. So I really wanted to put this together, get this out to you guys as soon as possible, just to address a lot of the questions that are out there. So I hope this helps. So there are really only two methods to qualify. There has to be a government order that partially or fully suspends your business operations because of COVID-19. Or there's a decline in gross receipts when you compare that quarter in 2020 or 2021 with the same quarter in 2019. So if you're looking at 2020, then there has to be more than 50% decline when you compare that same quarter with 2019. And for 2021, it's more than 20%. I'm going to leave a link at the top for a podcast that I did earlier on the ERTC, which will have some other details on there as well. So please refer to that. So a government order would come from the federal, state, or local government. Any statement by a government official in the media is not a government order. An example of a government order in California was when dine-ins were shut and you could only take out deliveries. And this partial suspension by a government order caused a more than a nominal change in the business operations. You could only do takeouts or a delivery to your residence or business. If a trucking company couldn't get new trucks because of supply chain issues, that's not because of a government order. In 2020 and 2021, demand for freight went up, sales went up, and trucking was considered an essential business for the most part. So a government order that forces your customers to wear masks, or if you have to implement social distancing in your business, is not a suspension of operations. There has to be more than 10% nominal effect on the business operations because of the government order to be considered a suspension, partially or fully. And this notice by the IRS from the Internal Revenue Bulletin 922, IRB 922, this has many examples where the government order would have a nominal effect on the business, more than nominal effect on the business, which would then mean that it was partially or fully suspended and you could qualify for the ERTC. So I would recommend anybody to read this. If you have any questions on this, please let me know. So once you've received the ERTC refund, you have to add that credit back into income for the year that you applied for. So if you receive your check in 2023 for the ERTC from the IRS, and it's for the, let's say, second quarter of 2020, you have to go back to your tax return for 2020, amend it, include that credit back into income, and if it results in more income, then you have to pay more taxable income, then you have to pay the tax on it. So you cannot include that credit in your 2023 tax return just because that's the year that you received it. You have to go back and file the correct tax year. So the statute of limitations to collect the tax that's been assessed is 10 years. So you could be audited in 2027, which might be the time the IRS gets around to audit your tax returns. They would go back and see that you received the ERTC checks, but you didn't amend 2020 or 2021. And as a result, your income would go up in those years, potentially, and potentially you would have the late payment penalties, possibly civil fraud penalties of 75%, plus the interest, which the interest rate right now on any IRS liability is at 7%. So on an incorrect application for the ERTC, you potentially have the ERTC credit itself to pay back, plus the penalties and the interest also. So it's not a good situation to be in. And on any potential fraud, they have unlimited statute. They can go back any number of years and assess the taxes. So paying back the ERTC plus all the penalties and the interest is a huge cost. It's best to make sure that you've applied for it correctly. If you've received the ERTC tax credit checks from the IRS, then please let us know so that we can go back and amend the 2020 or the 2021 tax returns correctly. It's best to make sure you qualify before applying. That is a requirement from the IRS. We will only file applications once we know that you qualify. And this is to protect ourselves and also our clients from future audits. The whole reason for the PPP loan and the ERTC program was to help keep employees employed so they don't fall back on unemployment claims. And just on a side note, on your screens you're seeing the PPP loans and EIDL, which was the economic injury disaster loans. So Congress last summer, they increased the statute of limitations to investigate fraud on these applications to 10 years. And there's a copy of the signed legislation at the bottom. I'll also put a link at the bottom of the podcast so you can copy and paste into your web browser if you want to view that. But the EIDL, which was the economic injury disaster loan, that was intended for business operations. And if you took the money out of the business, then potentially that was fraud. So last year, they've increased the statute to 10 years. I hope you find this information useful. I'm sure we're going to be dealing with the COVID relief programs for many years to come. If you have any questions, please let me know. Please contact me, email me, or call me. I'm AJ Singh, CPA from GNS. I look forward to speaking to you soon. Thank you very much.